I think it's oftentimes the biggest transaction of their lifetime. So what we try to do is get in front of the transaction as early as we can and help them prepare for that exit. So oftentimes we may elevate the service to an audit if they were a tax-only client, so that when we get into that diligence phase, the diligence goes a lot smoother and they're prepared for that exit. Our approach is a little different than most investment banks or brokers in that we take a holistic approach to our clients' exit process. When a client comes to us and says they're ready to sell their company, we really want to make sure that we're doing everything possible to ensure a completed process. And we'll also take a look to make sure that estate planning is in order, tax planning is done. Oftentimes in a sale you get caught up in the value or the enterprise value, but it's really about the terms and conditions, and what our client keeps at the end of the day is what's most important. So we really focus on that in-pocket analysis and take a more rounded look at the whole transaction process. The market is really busy right now. There's a lot of transactions. Clients that may not have sold back in 2008, 9, or even 2010 are seeing volumes ramp up again. So the market is extremely busy. Banking is very favorable right now to get deals done. And same with acquiring. We're seeing a lot of our clients go out and actually make a few acquisitions right now. And the world is turning to private equity. So a lot of our entrepreneurs are making small acquisitions today to enhance EBITDA for tomorrow, and ultimately upon an exit, those private equity buyers really look to management teams that have done transactions. So we're certainly seeing our fair share of buy-side and sell-side deals right now. We do a lot of work for private equity sponsors and players right now. Oftentimes, since we are in the middle market, very familiar with these kinds of companies, private equity suitors will call on us to perform a quality of earnings analysis or due diligence study. So we are very active with private equity. Having the right deal team is critical to seeing yourself through the process, and it's not just with our counsel of preparing the company for an exit, but it's also having the appropriate M&A attorney and also the right financial advisor. So it's our job to generate the liquidity event opportunity. It's your lawyer's responsibility to make sure that the terms and conditions are favorable. And finally, it's the financial or the wealth advisor's job to keep you wealthy once you have the liquidity event. So we really like to get all of the advisors around the table. We try to prepare a company several years before the ultimate liquidity event. So what we look for are things like data rooms. We want to capture as much of that data as early on in the process as possible. We want to begin capturing those add backs. And finally, we want the company to begin to run itself. So if the entrepreneur wants to pull away from the business in a post-transaction environment, we want to be sure that the next layer of management is ready and capable to take the reins. That also helps us validate our add back too along the way, which enhances enterprise value. I've actually prepared a 3 or 4 page summary of bullet points that says these are the things the company should have in place when they're ready to enter a transaction process, which I'm happy to share. And those are the same very things that private equity often looks to as well to find those exit opportunities in companies that are ready. A deal can be a long, fatiguing process, so the more of these things you put in place up front, the more likely you are to have a robust exit at the end.